In Q2 of 2024, I started a position in Tesla and I averaged my price at 163. So I started to buy Tesla because I felt it was undervalued. Now, I'm also a passive investor. I invest in the S&P 500. Tesla is part of that. So if you are a passive investor of an ETF that tracks the S&P 500, you already have exposure to Tesla. However, I think that in some cases you might want to have a little bit more exposure to a individual company within the index that you are particularly attracted to. And in my case, that's Tesla. In this video, I'll explain my thinking framework with you and how I started to invest in Tesla as a Stoic investor. So if you're not familiar with my work, I am the author of The Stoic Path to Wealth. I've written about how to invest in the stock market as a Stoic investor. So I started investing in 2007. I failed my way all the way to 2015. And that's when I discovered the philosophy of Stoicism, which really helped me to have a mental model for dealing with challenges in the stock market. So that's when I started to finally get back into the stock market. And I've been developing my strategy ever since. It's mostly part it's mostly based on a passive strategy. However, I also like to pick stocks. Now, why did I buy Tesla and why at that price? Because I think as an investor, that's the most important thing you need to answer to yourself. Why are you buying a particular stock and why at that price, right? Because a stock could be great, but not at a certain price. So price is the most important thing, right? Because that determines your potential upside and also potential downside. Now let's take a look at the stock chart of Tesla for the past 5 years. And what you see is that it's been essentially flat since Q4 of 2020. That's 4 years ago. And before that, it obviously had a massive gain, and Tesla was up more than 1,000%, which is, of course, out of the ordinary. Now, the thing is that, you know, these types of massive gains never last in the stock market. And what you often see is that after a stock makes this great move, it consolidates for a while. And in the case of Tesla, that's been 4 years. Sometimes it takes a year, sometimes it takes 2 years. But when I was looking at the company, but also at the stock, I felt like it was undervalued in the $160 to $170 range. And that's when I started buying because at that price, the PE ratio of Tesla was somewhere in the 40s. And the rule of thumb that I use when it comes to valuing companies is more story based because I think that's the way to go in today's stock market because every stock that goes up has a story behind it. You can see that perfectly now with Nvidia. The story is AI, and it has had this massive ride up, and everybody loves the stock because it has so much momentum and actual earnings. The company is doing really well. It's posting really solid earnings growth. It's making a lot of profit. So this is why investors want to own the company. So there must be some kind of story behind the company in order to invest in it. And with Tesla, the story is currently that they have a lot of new things in the pipeline. They have the robo-taxi, they have a potentially cheaper model as a Model 1 or 2 that they will introduce as a affordable vehicle. They have their Optimus robot. They are very active in the energy storage field. They are active in AI. So there are a lot of forces behind the company that have the potential to make the stock explode. And that's what I'm always looking for as an individual stock picker or looking at individual stocks. I want to pick the companies that I feel comfortable holding, right? Because if you don't feel 100% comfortable and you're not really convinced that this company will keep growing and it will grow fast, because at a PE of somewhere around the 60s, where Tesla is right now, as I'm recording this video, it means that they need to provide some substantial earnings growth. Kind of the rule of thumb that I use for valuing companies is that if you divide the PE by two, you kind of have the percentage of earnings growth that the company should post in the next quarters or in the next year. So let's say you see a company with a PE ratio of 50, it means that they should grow their earnings by roughly 25%. Now, when I looked at Tesla in a PE range of somewhere in the 40s, or let's say even 50, I thought to myself, in the next year and the years ahead, will Tesla grow by 25%? I do see the storylines with a new model, with the robotaxi, with their robots, with AI. I can see massive earnings growth, even for a company that's already this mature as Tesla and has been around and has had a massive, upswing in well, basically before 2020. I still think there's a lot of room to grow. So I love the story. And at that price, I also like the valuation, because if you look at the average valuation of Tesla over the last several years, the PE has, never been lower than 40. We had a brief period at the end of 22 when the stock bottomed at somewhere around 112 or 11. I can't recall exactly. That was an absolute bargain price. Of course, that was an absolute bargain price in hindsight. But, when I looked at the company this year, and still I think this way, I said to myself, yeah, I like the company. I like where it's going. I like the price. I like the story. And one of the things that I love the most about Tesla is that it has so many fans and so many people covering the stock. I can't think of any other company other than Apple that has so many blogs and YouTube channels and social media accounts that just post daily about the company. But there are so many YouTubers and analysts covering Tesla, and I've been following some of them, and a lot of them have multiple pieces of content every day. So the amount of news that's going on within the company and in the community is unbelievable. So there's a huge community behind it. And that makes you believe that it's a solid company. It has a lot of believers. And all of this doesn't mean that it will always go up. Just look at the last 4 years. That's another reason that I started to invest this year, because I looked at the past 3 to 4 years and I said, well, it's been essentially flat. So that's actually a very good sign. I like that as an investor because it means that it's not a meme stock. It's not something irrational. So there's a lot of institutional ownership in Tesla. So it's not just the stock that the public loves. Right? It's a company that's been proven by now. And it's not just a company that risk takers want to invest in. So all of these things together told me the story that Tesla is my favorite company, of my favorite undervalued company within the S&P 500. So this is why I want to have more exposure to the stock. So that's been my thinking process. And as a Stoic investor, I look at multiple factors, right? Like valuation, price. I look at the story, but I also look at whether I'm willing to hold the company for a long time. And that really relates to position sizing. So I have this rule called the 90-10 rule. That means that I dedicate 90% of my portfolio to the S&P 500 and 10% to picking stocks. Now, sometimes that rule is 85-15 and at max 80-20. So I really look in that, 10% range, 10 to 15% range, and think if I put, let's say, 5 to 10% of my portfolio in Tesla, would I get sleepless? Would I get rattled when the stock does what it does, which is go up and down a lot because it's a volatile stock? And that's actually the thing what you get as a stock picker. You often get more volatility. This is why I love the S&P 500, because it just doesn't make you feel like you're on a roller coaster. And owning a stock like Tesla will. And you need to be comfortable with that. So the best way you can get comfortable with that is to invest an amount of money that doesn't make you nervous, that you're not relying on to pay, for your kids' college or for your, for the down payment of your house or something like that, right? So you really want to pick the right amount of money to invest. And if you can put everything together and you like the story of a particular company, then it's great to invest. And that's what I, of course, did. So when I'm talking about talking about myself, of course. So that's how I basically analyze a stock and talk to myself about it. And if I can convince myself that it's a right move and I can see the upside and the downside too, I am more comfortable with putting my money in an individual stock. And that's what I did with Tesla. So thank you for watching. If you want to learn more about Stoic investing, check out my book, The Stoic Path to Wealth, or go to my blog, dariusfaru.com. I have more than 650 free articles on my website that you can read on decision making, productivity, investing, personal finance, and stoicism. So check it out.